Hello, and welcome to the latest edition of the Bellringer. We are now up to volume 30, and I am delighted to welcome Clark Reed from Gemini. Clark is the head of Gemini Prime, which is the institutional crypto solutions at Gemini, which is involved with building products and services in the crypto space for institutions, including a regulated cryptocurrency exchange, wallet, and custodian that makes it simple and secure to buy Bitcoin, Ether, and other cryptocurrencies. Prior to his move to the crypto world, Clark was in the institutional world, holding trading positions at Barclays, Credit Suisse, and Nomura. Welcome, Clark.
Thanks for having me, Stacey. It's great to be here.
Terrific. And you, like me, came from the traditional finance side. We were Lehman Brothers way back.
Yeah, I started my career in 2005. Feels like yesterday.
Yeah, that was an interesting time. So why don't we start this off of how you got into the crypto world in the first place?
Sure. So like you mentioned, I was an FX trader in New York and Singapore for a long time. And as the first real big crypto wave of price action at least came in 2016, 2017, was the first time where I really started to take notice about this type of technology. I mean, first I was interested by the price, as I'm sure a lot of other people were. But then once I started to dig in behind it a little bit, I started to learn and recognize more about kind of the fundamentally transformative nature of the technology behind Bitcoin and other cryptocurrencies. So I did about 9 months of educating and networking around the space when I was based in New York in 2017, and then finally realized that I kind of wanted to devote my career to this and make a pivot to get some more transferable skills, some more regional transferability away from just the financial hubs of New York, London, and Singapore. So yeah, now looking back on it 6 years later, I think that thesis has really started to bear out.
I think so. And you're based out in California.
Correct, in Los Angeles.
That's right. What do you think is the current state of the institutional crypto market today?
So I think since I got into this space about 6 years ago, there's always been this wave of a narrative saying the institutions are coming, and everyone's been waiting for a big bullish price signal based on the fact that there's been institutional capital deployed. I think thinking back on it and seeing how things have evolved over the past 5 years, it's been less, at least to this point, about a wave of capital coming into the space. It's been more about a wave of connectivity and building infrastructure to be able to support traditional investors that are looking to get into the crypto space. I'm talking my book a little bit because that's a lot of what we work on at Gemini, but I think, even if you have billions of dollars of capital sitting there on the sidelines, whether it's retail or institutional looking to get involved, you've got to have the toolkit to be able to support that in order for things to truly scale and for there to be true widespread adoption.
Sure. What else do you think are some of the greatest challenges currently when you're trying to bring in the institutional side of things, and what would you recommend being done?
Sure. So the first one I would point to is definitely the volatility of the space. It's still so immature. It's only been a decade or so since the Bitcoin white paper was first released, just longer than that actually. But as a result, I think that with any new technology or any new asset class, really, there's this period of contraction and expansion that happens very rapidly as things get adopted and improved upon and iterated on as they scale. And so I think that the more mature crypto gets, ideally, the less volatility overall we'll see, and it'll be more palatable as an investment vehicle, as a vehicle for payments, all the potential use cases that people have talked about for crypto over the past decade or so. So volatility is really the first one. For the average person to use crypto on a day-to-day basis, it can't be moving around doubling and halving every day, right? So that's the first one. The second one I would say is just at a high level, there's been a lot of lack of regulatory clarity on a global basis, and certainly in the US. So again, as the marketplace starts to mature a little bit more, as there's infrastructure and connectivity built out, you'd hope that volatility starts to come down and we can seamlessly work our way into, again, both from a regulatory perspective, from an institutional perspective, from a retail perspective, just some kind of happy landing ground where people can be comfortable with, innovation in the space, while certainly also hearkening back to some of the existing regulation.
Well, there's, obviously, Gensler has been talking, and there's been a lot of discussion about what is going on by way of regulation. And there's been a lot of threats from companies saying that, we're going to leave the US. It's going to be too difficult. What are your feelings on what are your feelings on that?
Yeah, so zooming out one layer, I mean, the way that I look at this technology is it's effectively a settlement network designed
Okay.
with different parameters, right? So you talk about me giving value to you or vice versa, or me storing value, me, using these technological rails to transfer value.
Mhm.
So ultimately, I think it's kind of almost asset class agnostic. I know there have been these battles waged in the US regulatory ecosystem and elsewhere
Right,
about, is
right,
this token a security? Is this token a commodity? But
right.
again, kind of zooming out one layer, you can put a Picasso on a blockchain and it's still a Picasso, right? If you and I wanted to start a company together and put
Mhm.
shares of that company on a blockchain, it's probably a security, right?
Right.
So in my mind, the technology itself is kind of asset class agnostic. It's the
Okay.
different implementations that we've seen that take on the characteristics of certain
Mhm.
traditional asset classes. And so I would hope that regulators across the globe really would kind of have an appreciation and understanding enough of the technology to apply that kind of lens on it rather than trying to throw everything into one particular box.
Right. Well, what would you advise? I mean, obviously the blockchain technology is underlying it, and there's so much potential in that. But there seems to be a lack of understanding, as you had said, within the regulators. I mean, we go back to our trading days. Remember when electronic trading and high frequency trading, algorithmic trading came out, and they were all threw up their hands and they were, crazed about it, but that worked out. Do you see a pattern again like that now?
I do. I think it's always a bit of a catch-22 when you talk
Mhm.
about new technology, and it's a bit of a dance with regulators not wanting to stifle innovation entirely, but
Right.
also on the other hand, not wanting to let things get out of hand to the point where they might be like systemic issues, for example. So
Sure.
I don't envy them being in the position that they're in because it is a delicate balance.
Mhm.
From my perspective as kind of a pragmatist and a realist, I feel
Mhm.
like industry engagement is, again, like
Mhm.
more increased communication is a great way to kind of get through those challenges and find an efficient place on that risk reward curve.
Mhm.
So yeah, I mean, certainly the industry has struggled with that in the US lately, even just in terms of people being able to get in front of regulators with the idea that they're going to be benevolent, in that sense, despite certain promises that have been made. But yeah, I don't know. I tend to take an optimistic outlook, and I think this technology is so transformative that we'll
Right.
eventually get there and settle in the right
Right.
place.
Okay. Well, now for our final point, I'd like you to take a long view in the next 5 years, next 10 years. Where do you see the technology going, and how will it help institutions?
Sure. So I think, again, kind of speaking back to the point I made earlier, due to the rapid acceleration of innovation in the space, we've certainly seen a number of different speculative bubbles that it's
Mhm.
in certain cases have admittedly, I think anyone in crypto would admit, have like outpaced the actual use case of the technology itself. That's
Sure.
natural for any type of new technology. It's not unique to crypto. We've seen it time and time again with the internet, et cetera. But I do think there's enough of a fundamental value proposition there underlying the technology that hopefully, again, we kind of find equilibrium and the space is able to scale and integrate into existing systems without
Mhm.
that speculative wave leading us to a place where there's boom and collapse and regulatory crackdowns and all that kind of stuff. Again, hopefully we can achieve that healthy balance so
Mhm.
that you and I are sitting here 5 or 10 years from now and everyone's got some Bitcoin in their wallet, or everyone's using a stable coin for payments, or everyone's part of a DAO instead of a membership club for something. There are countless use cases that may emerge.
Uh-huh. Well, I love your optimism, and I think that that gives us some things to chew on. It's a very interesting time. I think that's a Chinese curse, but I like to think of it as more optimistic now with some of the developments in this. So, Clark, thank you so much for your time, and I look forward to seeing you all. Full disclosure: Clark was one of our panelists in our Newport Beach After the Bell event. And we had a terrific talk. We're looking forward to coming back west again soon. So thank you, Clark. And thank you all. And I hope to see you all on our next After the Bell and Bellringer talk. Thank you.
Again, thanks for having me.